And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, fellow futures traders, family, and friends. It's time for the market forecast for Tuesday, June the 14th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're focused on context. We're focused on risk management and always focusing on remaining patient. This morning, economic numbers. Well, we're all well aware that it's a two-day FOMC meeting. The party begins today. 6 o'clock, we had an OPEC monthly information come out. Not very impactful as far as the price of crude oil is concerned. And at 7:30, just a few minutes ago, we had the PPI final demand numbers. They came out as expected or even a little bit lower, even trimmed the last release a little bit. The markets seem to be liking that information so far. But overall, U.S. stocks are set to open a little bit higher in what everybody's calling a dead cat bounce as investors and traders jockey for position prior to the FOMC release tomorrow. A 75 basis point increase now seems to be the consensus, and that was, of course, prior to the PPI numbers. And I'm sure the FOMC are going to be looking at those numbers this morning. Cryptos remain under pressure after a couple of crypto exchanges hit a liquidity crisis yesterday, actually suspending withdrawals for a brief period of time. Crude prices again slightly higher after the OPEC report, awaiting the API this afternoon and EIA tomorrow, and still largely range bound. The 10-year yield is the highest it's been in about 11 years. The yield curve seems to be inverting. Yet another indication of impending recession. We hope that does not happen, of course. But as we always say here on the market forecast, ACH, anything can happen. As always, hit that lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel. You can get notifications when we do go live. We do have the Coach's Playbook today at 11:30. I look forward to being there and helping to present that. As far as the VIX this morning, it's off about 1%, 33.66 the last I checked. Dollar index pretty much flat, 105.07. And the yield on the 10-year is off just a little bit, but was up around 1.35 last night, around 1.31 right now. As always, good morning to everybody. Scott saw, and he conquered. He's the first one in the room today. You win the prize, Scott. Brian, Miguel, Shaw, good morning. My brother Rick, love you. Zach, good morning. That letter opener, good morning. Tachyon, Taurus Trader, Terry King, Theo, Dan Trader, Marcelo, James Swan, good afternoon to you. Bill Phillips, Ron Stoneberg, John Doherty. Oh, it was good to see you the last couple of days up in our little party. James Swan, good morning. Had a hit at Globex this morning. Can't trade today. A lot harder with slow movements like that. Yeah, there's a lot lower volume there. It's a little more challenging. If you ask me, I much prefer when everybody's present and able to affect the marketplace. Sarah Hall, good morning, prayers and flowers and love to you as well. Isaac, I Print Money, good morning. Peeps, Three Lions, Stephen C, ZK, Glitter Sandwich, William Hinson, Brody, Trading Research, Dimitar, good morning, everybody. Dead letter opener. My goodness, good morning to you. The Grim Reaper Trader, good morning. Yes, avoid death in the markets today. Randall, Eric, good morning. Ish, Rob T. I saw a couple of names I don't know that I've seen before. Welcome to the Market Forecast. If this is your first time here or your first time commenting, thanks for commenting and thanks for stopping by and saying hello. Good morning, Joe. Today is Tuesday. It is Make Hogue Money Day. If you have not been to Make Hogue Money, come check it out. It's when we all sit together, watch the S&P open, and you guys bring your trade ideas. We discuss, vote, and take those trades. It's about an hour long. It's going to be right after the market forecast this morning. About 8:20, we should be in the Zoom room. We'll go over some basic rules, and we'll get into the markets. We, of course, don't have to trade. If we come up with some ideas, we'll vote, and we'll take those trades. Always a good time. We'll be there for maybe an hour. And we do that on Tuesdays and Thursdays. There's the link. I just put the link in the chat for you to register if you have not registered. But I look forward to seeing everybody there, and everybody gets a voice. All right. My goal today, which is very similar to Grim Reaper Trader, my goal today and this week has been don't lose money. Now, some people might be thinking, well, if you're trading not to lose money, you're going to lose money. That's not so true. I'm just not going to put myself in a situation where I'm going to become emotional, where I'm going to have my switch flipped, as I call it, to where I just step away from any strategy or process and start grabbing at straws to try and make that money back. I can take a loss. Like I always say, let them take the worm, but they're not getting my rod and reel. James, yeah, I'm sorry about that. We may be expanding or changing the times for Make Hogue Money from time to time, so we'll keep you abreast of that. Maybe we can get you into a Make Hogue Money, but we will miss you, and we wish you were there. Denise, good morning. Alfred, George, and James, yeah, we'd love to have you there. Maybe we'll make some adjustments in the future, and maybe you'll have an opportunity to join us. All right, let's take a look here into the S&Ps on the daily chart. Here we go. So it's open interest. We added another 125,000 contracts yesterday. Now, with the directional activity we've had for the couple of days and the fact that it is in rollover, a lot of that open interest is due to rollover. I'm looking at that as partially directional. I'm thinking we've added some new shorts in this market. We saw some delta divergence early in the session yesterday, which might be indicating that we did see some newer participants betting to the short side yesterday. Markets are seeking balance, and we talked about that yesterday, where I kind of thought, we had a directional overnight. We had a lot of shorts in the market, and the market, I thought yesterday, would try and start to find some balance to have traders have the ability to jockey for those positions, to have the time to hedge themselves before this FOMC meeting release tomorrow. So I think we got what we were looking for in large part yesterday, and we're still in yesterday's regular trading hour range in the overnight session today. So I think our assumption that we may be falling into range before this release, it came out to be relatively true. So here's that delta divergence we saw early in the session yesterday. Price continued to push lower against the more aggressive market order buyers. That's what it gives me the indication that increase in open interest was more than just rollover. There's some bets coming into the short side here. What did we do last night? Well, last night our low is basically settlement, which by the way is 37.5350. In case you want to put that on your chart, the overnight high, the value high from yesterday. So we basically spent all night inside yesterday's area of value where we remain. The PPI numbers came out. We got a nice little knee jerk to the upside, but we didn't really change the perception of value. So if my assumption or my hypothesis is going to be correct, I'm going to stay real patient today. I'm going to look for opportunities, value high from yesterday or our overnight high, or value low from yesterday / settlement or our overnight low before I do anything today. I don't want to be stuck here in the juicy middle. I want to be at the extremes where it's been overnight viewed as too cheap down here and too expensive up here. Patience is going to be a virtue today, I believe. Join us again for Make Hogue Money. We'll see how this market opens up and if there's any really good early opportunities. But, for me, just knowing what we've got coming out, knowing the current context of the market, that's what we're here to do, is always be thinking and looking about the context of the market. Okay? So we'll see what happens here. Of course, anything can happen. We all know that. That's our acronym here is ACH. Anything can happen. But I'm looking at this as an opportunity to just kick back, let the market establish some early ranges and work those extremes of those ranges so I can limit the risk. Remember, my goal is not to lose money this week, but I can. But I don't want to become emotional. And if this market becomes, more volatile as the week goes on, as we get past the FOMC meeting, it's going to be even more important, in my opinion, for me to remain patient and let the market talk to me. Listen. If we're talking, we can't listen. And I'm afraid I do enough talking. Let's take a look at crude oil here. Maybe we'll even catch the open, although I don't think it's going to be all that tremendous an opportunity. I've been wrong before, trust me. And whenever I say that, the market has a tendency to make a liar out of me. Imbalance in the teeth of rollover. Volume and open interest are kind of blind now. We can't really see. We lost 4,300 on this move, an attempt to the low of the area of balance yesterday. We lost 4,300 coming off of that. Were those shorts possibly covering? Of course, possibly. That's one of the indications of losing open interest on an up day like that. Well, now we're up near the upper extreme of the area of balance. The extremes of this area of balance are, in my opinion, going to offer the best opportunity because it allows us to limit risk and it offers, if the market does return to the low, a pretty large profit opportunity. So let's take a look at what we're seeing on the 30-minute chart. Here's the balance that we've been in since about 1, 2, 3, 4, 5, 6, 7 trading days. So again, we're in rollover. Yesterday, we took a look down to the downside. Last week's low is supportive. We didn't quite get there. Last week's high, well, we're on our way to looking at it now. But when we see this area of balance, this profile here, this volume profile is not very even. And I think there may be some repair left to do between these two high volume nodes to fill in this low volume area here. It doesn't have to happen. We know we've got API and EIA tomorrow. But if we do get an opportunity to look for a fade at the high of the area of balance, which has been proven too expensive, or an opportunity to look for a fade at the bottom here, which again has been shown to be too cheap, those are the opportunities I'm going to be looking for, because again, I can limit risk. And if we do get a rotation, even back to the point of control for this longer time frame profile here, that's going to be a pretty substantial opportunity. So the market really kind of looking at and opening in just a minute. And it's going to be opening, but appears with a gap. So if we can't close this gap, where is our overnight inventory? It's a little bit long, but seemingly willing to push price higher. So if we do open and leave the opening range at the low of the session, that might caution me not to look for the fade up against last week's high. It's about a 50 tick move right now up to that level. So I kind of want to watch the opening range here, if that's all right with you. It's going to start here in about 20 seconds. But if we do reject up here, then I'm going to really be looking for this market to return to this area to fill in some of this profile. Look at the profile yesterday. We've got a high volume node down here. and we've got a high volume node up here. So here's the opening range, 23, 30 ticks, 30 some odd ticks. See how it's getting pushed to the downside already here. Opening tick here, nice little push higher, rejected. Let's see if we can get back into yesterday's range. What was the yesterday's range? High was 122.25, 122.23 the low. So if we were to leave the opening range at the high and get into yesterday's range, so because this level right here can be supportive, or it can be or it can be rejecting. So here's the opening range. We got 23, just under 40 ticks. Just under 40 ticks. That's a pretty big opening range. Probably not going to be taking that. Hey, Mr. Hoyt, managing kids this morning, so only half present. That's okay. Hopefully we'll see you and make Hogue money. So we're still in the opening range, not showing a lot of confidence in either direction. Do not like the fact that we traded to yesterday's high and seem to be rejecting. We have to move on, so I'm going to move on to the Nasdaq. We may come back and revisit that opening range in the crude oil. And then we'll, of course, be able to see what happens with any opening range opportunities in the S&Ps and make Hogue money. Here's the Nasdaq. It's almost the same picture usually every day. It's a similar market, similar but different. Open interest, again, we added 25,000 in open interest yesterday, and it's as a function of rollover. That can be a little bit blurry. It can be a little bit deceiving, but I'm thinking that's a pretty big number and that we probably did bring in some new shorts, some new bets to the short side yesterday. Dead cat bounce, seeking balance. Investors here ready to jockey for position. Probably going to see lower volume, maybe a little bit lower volatility than we have seen, but I'm still expecting some volatility. Here's the 30-minute. Settlement is down here, 11,327.50. We spent most of the night in range and in value. Overnight high just above value high, overnight low just above value low. Here we go. So again, I'm going to be patient. I'm going to be first place I might look is at the overnight high and the overnight low for opportunities here. What's going on? Okay, so we found support at yesterday's range high. We've taken out the high of the opening range. This is a go with the long side situation. With the size of this opening range here in crude oil, it was a little bit inhibitive because of the amount of risk, but already it looks like we're about at 2-to-1 reward over risk. Here's what that looks like on the 30. Here's our area. Knowing that the opening range is the low of the session and we found support at yesterday's high, I'm probably not going to be taking the short here without some sort of structure establishing in the day time frame before I'm going to get involved in this. Dead letter openers targets 124. All right. Let's take a look at gold now. Okay. The open interest loss yesterday is not very healthy for any downside auction or the beginning of a downside auction. Take a look at this trend line. I'm calling this the R. Hoagland trend line. This was the trend line my brother had me put on. And look at how, we had resistance here. It became support, 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 support. Is it going to be supportive today? We lost again 9,500 in open interest yesterday. A little bit lower volume, but still pretty decent volume. The weekly kickoff low of 1818. The black line right here is going to be extremely pivotal for us today. Again, note the R. Hoagland trend line. Here's the 30-minute chart. So the 730 bar here, the absolute low, 1870. I believe that the opening range at 720, the dead low is 1818 even. So we had a direct hit on weekly kickoff low, and the market seems to be attempting to pull away from it. We don't know what's going to happen. This is a really nice opportunity down here because, again, it allows us the opportunity to limit risk. I know the opening range was not the low of the session. The market did take a look below the opening range right to a support level and has turned around. This level here gives us the opportunity, again, to limit risk. Are we going to head back to the upside? Who knows? We did open with a gap. We've yet to close that gap. So the rule states if we open with a gap and cannot close the gap relatively early, we should look for opportunities to trade in the direction of the gap. Come to the recap today. We'll see how that plays out at the end of the day. But we're at the low end of an area of balance. We're at an important inflection level. We've rejected that inflection level. If we do get an opportunity to close this gap and get into value from yesterday, the value area special situation comes into play, and the statement is opening out of range, reestablishing acceptance inside of previous day's value. There's a good probability that price can reach the other extreme of the previous day's value at some point during that session. We'll check this out on the recap and see if any of this has played out as hypothesized. Now that I've said it, it's probably not going to happen. Market loves to make a liar out of me. So here's the euro, excuse me. Volume and open interest, we had a pretty decent increase to the downside. Rollover is largely over today, so we don't have to worry about rollover. We added 6,200 in open interest on higher volume yesterday, down to a rather important inflection level of the weekly kickoff low. It seems that it has been proven too cheap for now. We're going to have to keep an eye on the dollar, and there's plenty of weak structure above for the market to go back and clean up any unfinished business. By weak structure, I'm talking about the gaps, talking about the naked points of control that remain higher once we broke down here. Here's our low. Here's weekly kickoff high. And I don't think we break market state until we get above that weekly kickoff high. So here's where we're at. We've got a little bit longish overnight inventory. We are in range, bordering the high of value. Is this market primed for a pullback to the upside? I see that certainly as a possibility. A move back to last week's low or point of control from last Friday would be, I would think, a welcome opportunity for those that are looking for a chance to sell strength in this market. Let's take a look at the 10-year now. So we added 19,000 in open interest yesterday. Not a huge number for the 10-year, but still an increase in new selling. We know rates are going to be going higher. Like the rest of these markets, I believe that the Treasury traders are just looking for the opportunity to limit risk. They're looking for the chance today to position themselves for anything that might happen tomorrow. I feel like today in most of these markets is a bit of a hurry up and wait type of situation. Here's where the 10-year is in relation to yesterday. Maybe a little bit to the long side, long-ish, I call it. But we're in range. We're in value. I'm going to suggest patience. I think it's another opportunity for us to hurry up and wait. Overnight low, overnight high. We're right between them. I don't see any reason to get in any hurry to get into this market today because, of course, we know what's ahead of us. And now let's go through the nat gas briefly here. Inside extended trading hour range, inside bar today. we're on the front edge of rollover here, so we're going to start to see volume. You get a little blurry, open interest get a little blurry. We lost 1,800 in open interest yesterday. I don't think that's all that impactful. I think that's a rather inert number, knowing that we're coming into rollover. So we got a little bit of open interest slowing, a little bit of volume slowing, a little bit of range-bound activity. We're right in the middle of that range. Look at the 30. Right at settlement, right in the middle of value. I'm really not that interested in this market right now. As a matter of fact, I'm putting it on the back burner, if you'll pardon the pun. Okay? So there was a question here on, here it is. Thomas Wright. Here it is. Date, contract, month, volume, total volume. Okay, this is the ES, so I get total volume, total open interest. Change in open interest, closing price, change in the closing price, delta in regular trading hours, regular trading hour direction, and New York Stock Exchange total volume. Take a screenshot, and then come to group coaching tomorrow, and we can talk more about what all this means and how to find more of this information. Don't have time to do that this morning. We've got important business to get to and make Hogue money. I'm going to have you guys make me some money. So here's that opening range again here in crude oil. So got about a 2-to-1. Saw somebody mention 124 was their target. Kind of weenieing out here a little bit. What was the weekly kickoff high? 124.30. So we got some space up there if we're going to continue. All right. All right. So again, we're looking forward to make Hogue money. You betcha, Thomas. You're very welcome. Yeah, you're right, Grim Reaper. There were plenty of bear rallies yesterday. And my brother did call that, didn't he? Beware of the bear rally. Okay, here, I'm going to put the link again into the chat here so you can get to make Hogue money. I'm going to be ready in about 5 minutes. We'll be in there by 8:20, have a little chat, and you guys are going to have the opportunity to talk, to show your charts, to come up with trade ideas. When we agree, we'll take them. You guys are going to make me some money today. Just know it. Always look forward to this. I hope you do too. Take your deep breath. Stay humble, grateful, and creative in your trading today. Let the markets talk to you. You guys can come talk to me in about 5 minutes. Keep praying for peace. Be kind to yourself, be kind to others. And I'll see you in about 5 minutes in Make Hogue Money. Let's go do it. If I don't see you, have a great trading day.